Good afternoon and welcome to the end of day market review for January 19th, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'll be walking us through today's presentation. Before we get into this presentation, we are going to ask that you give this disclaimer a read. Once we've done this, we can go ahead and get started. All right. So our agenda is to go through and take a look at the daily news. Obviously, we all know that the daily news right now is one of the biggest factors when it comes to making our trading decisions. We're going to look at the market outlook, which will include analysis on the S&P 500, where we'll be looking for support and resistance levels, and we will be looking at that MACD just to see where it's sitting. We're going to take a look at the volatility indicator, the VIX.X. See where we're sitting as far as our volatility or fear goes. And then we'll take a look at the current watch list, see what's happening there, see if there's anything on our watch list. Though the last time I looked, there was only one Canadian pick. There was a few from yesterday that poked into our watch list. We were pretty mixed on what we saw there. There was some potential buying opportunities there, but it was really going to end up boiling down to customers' preference and risk tolerance, knowing that the markets are getting into that overbought state. We've also got some time to just plug everything together and see what we can expect for tomorrow. Now we're going to be doing this through the eyes of both basic and advanced customers, so we'll give a little bit of an analysis there. If anybody has any questions, please let us know. You can do so by typing in your message through the chat box, and I will answer those questions at the end of the presentation. Alternately, if you would just like to raise your hand, I can unmute your line at the end of the presentation, and you can contact us verbally. So with that said, let's just go ahead and take a look at the news. So we can see a few things here. First off, we can see that Wall Street advanced with some positive earnings that came through the banks, mainly Bank of America as well as JP Morgan. It's also important to note that Google shares, they had their earnings, and with them being a major bellwether, they held back a little bit for any growth there. Oil has dipped down a little bit, though it's still sitting up above $100 per barrel. All in all, there's a lot more confidence that's been put in place in the major markets, including some of the fear being relieved from what's been going on in Europe. So all in all, things are looking a whole lot better. With that said, though, we can take a look at our technicals. And all I've done right now is drawn two very important lines. And these are the most current trends that the S&P 500 are sitting in. The thing with this is we've had a small breakout. It's at the point where it's even debatable whether or not we had this breakout. Really, it doesn't matter because it's been such a small breakout that it leaves question. What we really want to see is just another good day tomorrow, and that will really tell us if we've broken out beyond this line. Now, this is all great. This is all very bullish, and it's good confidence. It lets us know that people are really happy with the markets right now. The MACD is rising bullish, black line over the blue. All in all, things are great. The problem is that we've now pushed ourselves into a point where the S&P 500 just hasn't been. It hasn't been this high since July. And the thing with technical analysis and short-term trading is we really like to make sure that we can reference back to something. We always want to make sure that we can look back and say, hey, this is historically what's happened. This is our statistical outcome based on our disciplines. Right now, we're essentially trading in nowhere land. We don't know what's going to happen. It's very possible that this run could continue on for another couple of weeks. It's very possible that we could end up having a pull back and go right back down to 1250, which we were really only talking about at the beginning of 2012. And so what do we do? Now, this doesn't mean we don't trade, because like I said, we might end up going 2 or 3 weeks with this rally extending. But what we should do is continue to trade with caution. And that means that we're still going to be keeping a very close eye on open news and futures, and we're going to be making our final trading decisions based on that. Absolutely, there's things that could happen intraday, and anybody that has access to those markets during that time can take advantage of that and get out of positions early if need be. But all in all, just making sure that you're keeping a close eye and you're aware of the fact that we are starting to play with fire a little bit, and it's just a matter of time before we could get burned. So with this all said, let's see if there is anything going on with the VIX. All right, so what we can actually see here is the volatility indicator is now down below 20. It's currently sitting at 19.87. This has been the first time that we've seen the volatility indicator this low since the major concerns started to come out from the European debt crisis back in August. So definitely this is a comfort thing. This is one of those feel-good things to see. With it below 20, it doesn't necessarily mean the markets are that much more stable. Really, the big thing is above or below 30. So right now, we've got some confidence in this volatility indicator, and it's letting us know that we're not going to be seeing extraordinarily large or extraordinarily negative swings in the marketplace. Now, rather, we're going to see consistent movement, and that consistent movement might fluctuate a little bit. As you've seen with the S&P 500, we were in a pretty tight range. It doesn't mean that we can't have a little bit more volatility. It just means we're not going to see those triple-digit gains or losses, which is quite all right, given that we want a nice, consistent, steady trading system. All right, so let's see if there's anything on our current watch list right now. All right, so we've got a few stocks. Let's take a look at them. TEF. All right, so we've got a white candle here. It's rising, obviously. The black MACD line here is bullish. However, it looks like it just barely became bullish. The black line is over the blue, though, so this is good. I'm not concerned that it's just become bullish. The fact that it's bullish is good enough right now, though it does seem to be a little bit behind the markets. Volume isn't thrilling, but it is showing a minimum amount that we need, so we're fine there. The big thing now is identifying what's been going on for the last few days here. Well, it looks like we've been I don't necessarily like this line, but it does seem to be touching a couple of candles, so we're going to go with it. That's identifying a bit of a breakout. We do have a cycle high, which would be right here. And if we actually ignore that one, it looks like this has been a pretty consistent trading line as well, which would suggest that we've had just a breakout there. So do your number crunching, check your buy-in price, see if you have room to grow. Remember, you're looking for at least 2% room. And you really don't want to be stingy on this. You want to make sure that you've got plenty of room to grow. We're not looking at earnings. We haven't looked at news, so this doesn't mean that it's a sure buy. It just means that it is meeting technical criteria here. So let's go ahead and see what else we can find. TLM. All right, so this one is definitely a no-go. We've got our white candle. This is great. The black line is bearish, and the black line has not crossed through the blue line. This is definitely not meeting the market conditions, and as a result, we're just going to say no thanks. We can relook at this if it changes in the next couple of days or couple weeks, but right now, not what we're looking for. LMIA. All right, so here we got our white candle. We've got our black line rising. It's hard to tell, but let's see here. If we look yesterday, it was bearish. Today is bullish, so that's the first sign that it's rising. Black line is just barely above the blue line, so all in all, pretty good. Where I believe we're about to get stopped out, though, is this trend line that we've drawn right here. Not really identifying a whole lot of room to grow at all. So this is definitely a no-go. So I just want to make a point here with the second stock that we looked at, where we were looking at the black line that had not crossed through the blue line while being bearish. There's those rules that are just so blatantly black and white. And what we've noticed is there's customers that are still going to go ahead and they're still going to see what happened with that stock. And you know what? If the news is good tomorrow and things are positive, it's very likely that that stock is going to rise. And it's quite possible. And people are going to start going, well, geez, why didn't I trade it? I should have traded it. But we really need to be cautious of that, because we need to make sure that we're always being diligent with our core foundation, our core disciplines. There's just certain things that we need to see. Yes, there's our ideal trading lifestyle picks, which use a different doctrine to come up with those picks, and they might seem to contradict what we use for our day-to-day trading within the basic or even the advanced disciplines. But when it comes to our basic or advanced disciplines, we need to make sure that we're consistently adhering to those no ifs, ands, or buts rules. And that black line there, not crossing through with the market conditions the way they are, really is a scare there. And we know that statistically speaking, those stocks don't do nearly as well as ones that are meeting or exceeding market conditions. So with that said, don't beat yourself up if some of these stocks that you just clearly said no thanks to perform well tomorrow and you didn't get in on them. That's the difference between an amateur trader and a professional trader, is knowing when to take calculated risks and how to take those risks, and making sure that when they get into a trade, they've got the best statistical outcome. It's a big numbers game. So with that said, I do believe we've got one question. Let me just double check. All right, what is my measure of overbought? Now that's actually using some of our more advanced disciplines. Our advanced customers will be using indicators such as stochastics, RSI, as well as looking at previous cycle highs and even the MACD location to identify whether or not we're overbought or oversold. So we are overbought, and really what that does is it just puts us into a more cautious state. It's definitely a very bullish sign. It's definitely very aggressive, which is good when you think about it on the surface. But when you think back to the age-old rule, whatever goes up must come down. And that rule applies to anything and everything within our Earth, our globe. So we've got indicators that are saying, you know what, we are overbought. Now, the thing that's important to note about overbought is it's not a definitive line like this line is that we've drawn right here. This line is resistance. There's no ifs, ands, or buts. That line is resistance. And when you cross beyond that line, it's no longer resistance. The difference with overbought is once you cross that line, you cross into overbought territory, it doesn't mean you're instantly going to lose on your positions. It doesn't mean that the markets are going to start tumbling and falling down. It just means that it's beyond its happy trading range. And you need to be aware of that because it's not where it statistically likes to trade. And as a result, you can expect that the markets will start to get a little bit flaky and eventually just turn. And if for no reason other than the fact that it's been overbought for too long. All right, so hopefully that helps answer that question there. And with that said, I'd like to thank you guys for attending today. This has been the end of day market review for Thursday, January 19th, 2012. Have yourself a great day. Ciao for now.